All right, let's talk about money. Today, we're going to look at two completely different ways of thinking about it. You've got the super fast, high-energy world of trading tactics on one side, and on the other, you have the slow and steady art of building a real wealth strategy. So, what's the difference? And maybe more importantly, what can we learn from both? Let's get into it.
Sounds kind of weird, right? What if you could trade money? But believe it or not, that's the core idea behind one of the biggest financial markets on the entire planet. It's a place where the actual product being bought and sold is currency. Swapping dollars for euros or yen for pounds. Let's dig into that a little bit.
And that place has a name. It's the world of Forex. That's short for foreign exchange. Now, unlike the stock market that famously opens and closes with the bell, this is a global game that is always, always on.
That's right, it never sleeps. See, because it's a global market with no central location, as soon as a big trading hub like London closes for the day, another one like Tokyo is just waking up. This constant cycle means that opportunities and, risks too, can appear at any hour of the day or night, no matter if you're trading euros, dollars, or rupees. And this quote just nails the reality of it, doesn't it? It's a high-stakes world for sure. You hear these amazing stories about quick profits, but as this person points out, losing money is also a very, very real part of the game. It's this constant dance between risk and reward.
So, to even play in this fast-paced world, traders have their own set of tools, their own language. It can sound super intimidating from the outside, but honestly, once you break it down, the main ideas are pretty straightforward. So let's look at a few of the key terms you'll hear. First up, the name itself, Forex. At its absolute core, it's just the act of trading one country's money for another. That's it. Traders are basically making bets on which currencies are going to get stronger or weaker compared to others.
Okay, next up is a really key concept, the margin deposit. This is how traders can control huge sums of money without actually having millions in their bank account. You can think of it like a small down payment or a security deposit that lets you control a much, much larger position.
And this is just how powerful that margin can be. It's a concept called leverage. A pretty small deposit can let you control a position up to 100 times its size. Now, this is awesome when it works because it can seriously multiply your profits. But, and this is so important to remember, it can multiply your losses just as fast. It's a double-edged sword. So, how do you actually make or lose money in all this? Well, it all boils down to these two words. If the currency you bought appreciates, meaning its value goes up, you can sell it and make a profit. Simple. But if it depreciates, if it goes down in value, then you're looking at a loss. It sounds easy in theory, but it's incredibly difficult to predict in the real world. And this quote, it just perfectly captures the whole vibe. The market moves in a flash, and traders have to be ready to react just as fast. Waiting even a few seconds could be the difference between a huge win and a missed opportunity. This is all about tactics, quick thinking, and being glued to the screen.
And this brings us to the big question, doesn't it? While all that high-speed trading can be a powerful tactic for some people, is it the only way? Is that constant, high-stress, split-second decision-making really the foundation for long-term financial security? Or is there another way, a more strategic approach to building wealth?
Okay, so let's hit pause on the world of trading for a minute. We're going to shift gears completely. Forget the high-speed tactics. We're going to dive into some timeless strategies for building a truly solid financial foundation, and we'll do it through a simple but really powerful story. So picture this. There's this young guy, Sam, and he's probably someone a lot of us can relate to. He's been working hard for 5 years, he's earning a pretty decent salary, but he just feels stuck, like he's spinning his wheels and not really getting anywhere. So he decides to go find a wealthy mentor to ask for some advice.
And this is the advice he gets. Now check this out. It's not some secret stock tip or a hot trading tactic. It's 5 foundational principles, a roadmap. This isn't about getting rich quick. It's about building something real, something solid, step by step, that can last a lifetime.
The mentor starts with the absolute number one, most important rule of them all. It's not about how much money you make, it's all about how much you keep. This simple idea, spending less than you earn, is the entire foundation. If you can't get this one right, the mentor says, none of the other steps even matter. All right, rule number 2 is all about playing defense. Because let's be real, life is unpredictable, right? The roof might leak, the car breaks down, or maybe there's a sudden layoff at work. An emergency fund isn't an investment you make to get rich. It's your financial safety net.
It's the cushion that lets you handle a crisis without having to sell off your investments or dive deep into debt.
Okay, now this next one is so powerful. The mentor tells him the absolute best investment you can possibly make right now is in yourself. Before you even think about putting money into things you can't control, you have to invest your time, your energy, and some money into mastering your own skills. That's an investment that pays dividends forever.
So once you've invested in yourself, you can move on to increasing your earnings. Maybe that's a promotion or a side business. And all that extra income, well, that becomes the fuel for the final amazing step, letting your money start working for you. This is the world of passive income, creating income streams from things like property or other investments that make you money even when you're not actively working.
So let's just take a step back and bring this all together. We've looked at two totally different worlds, haven't we? On one side, you have the tactical, high-risk world of trading, and on the other, you have the slow, deliberate, strategic world of building wealth. So how do these two things fit together?
Well, here's the real takeaway. Tactics, like trading, can absolutely be powerful tools, but they are way more effective and a whole lot less risky when they're built on top of a solid strategy. Think of it like a house. Your strategy is the strong foundation. Without that, everything else is just shaky.
And that just leaves us with one final thought, one last question for you to think about. Looking back at those 5 principles, spending less than you earn, building that safety net, investing in yourself, which one of those feels like the most important next step for you right now? Because a strategy isn't just about knowing this stuff, it's about doing it. So, which one will you start with?